Hi guys, I'm Chris,
And I'm Jimmy.
and we are the Two Stocky Guys.
On this channel, we invest $1,000 into the stock market every week and share with you guys our experience. So let's look at our portfolio so far. This is week 8. So I have had 4 picks. Most of mine are bank stocks. I'm doing pretty well. I am up $156 from a 4,000-ish investment. The banks were at the bottom when I bought them, and I'm hoping they continue to beat expectations.
Yeah, you bought it in a good time. Your strategy's working so far.
Yep. And then let's look at your picks. You really try to diversify into different segments of the economy. So you have AMD, ConocoPhillips, and the Realty Income REIT. You are a bit down so far.
Yeah.
But also, we haven't had our dividends.
Haven't had the dividends roll in yet.
Yeah. Okay. So what did you pick for your last week's pick?
So last week I picked Prudential Financial. So they are a financial company, and one of the main reasons I picked this one is that they have a pretty hefty dividend. I think this is probably the highest dividend stock we've had so far, even higher than Realty Income actually. So yeah, they've got almost a 6% dividend yield right now, and they're at a pretty good price point right now. I actually owned some Prudential in my personal portfolio for a while, and I sold it when it got to 100 and made a nice profit off of it. So I've been watching it and waiting for it to basically get to the point where it is right now. So I'm kind of going with your strategy and getting in at a good price point. So hopefully, I'm predicting that this is going to go back up to the $100 price point that I sold it at before, and also get that nice dividend payout from it. So it's been a pretty good stock for me for the last couple of years that I've held on to it.
Yeah.
So I think that it's going to continue to be so in the future. And I mean, the financial sector is always pretty stable and makes a good amount of money. So I think it's a pretty safe bet.
Yeah, I'm looking at the 10-year chart, and it seems like it really hovers between 75 and 100.
Yeah.
Right?
So it's not really a growth stock. It doesn't have much of any growth at all, and that's kind of what you would expect from most dividend stocks too.
Right.
But like I said, I got it at a pretty good price before, and then I sold it when it got up to $100, and then I just bought back in when it dropped down again.
Yeah.
So that's kind of where I wanted to buy it at right now too. I thought it was a good buy, a good point to get in, because it's probably going to go back up to around that $100 price range and kind of, hover around that. I don't expect it to be a growth stock at all.
Yeah, I think it was up to 110 late last year in the October, November kind of time frame. Let me think about some cons where some people may not want a stock like this. I think that if you look at the past 10 years, it's just hovering between 75 to 100 to 110. I think if you're a young investor and you want to buy something and hold indefinitely, this is probably not the stock for you.
Probably not. I mean, if you're looking to use that dividend income, then it might be. But yeah, if you're young and looking for something long term, it's not good, because the dividend you're going to have to pay capital gains tax on, and I'm assuming you're just going to reinvest that.
Right.
So then if you ever pull that money out, now you're paying another 15% on. So yeah, that's a very good con.
Yeah. So I think younger people would probably want to go into more of the growth stocks.
Yeah.
I assume the growth stocks are going to fluctuate quite a bit in this coming year or two, but probably in the 10-year span, you'll probably get a little bit more gains from that. I think the other thing is that, given that it's fluctuation, there's really no rush to buy this stock.
Yeah, exactly.
Right?
Like I said before, I bought it when the price was low. I sold it when it got up there because I knew it was going to drop again, and then I bought back in whenever it dipped down. And honestly, I'll probably just continue to do the same thing. It seems to be working out for me so far.
Yeah, I mean, this range over 10 years is pretty, it's pretty legit.
Yeah.
So yeah, I think, if you're thinking about a stock you have to buy now, this is probably not it. But if you're thinking about something that will retain its value, will give you, I would say, a pretty good, near 6% is a pretty good.
6% is a pretty good dividend yield. It's not too incredibly risky, and then it's not a REIT also, so you are still getting the 15% capital gains tax instead of your income rate.
I think 6% is actually very, very good for a stable company.
Yeah.
Right? You can't really think about super stable companies that have dividend yields about
Yeah.
of near 6%.
Yeah, usually it's kind of a red flag when they have a higher dividend yield because I feel like they're kind of trying to get people, to put money in there so that they can use the money. And obviously, if they were doing well as a company, they wouldn't really need to be giving away money to get people to come invest into their company, basically. So it can be a red flag. You kind of have to delve a little bit deeper into the company when it has such a high dividend rate like that. But like I said, otherwise the company, I don't want to say ignore the lack of growth, basically, because that is a factor, but for the most part, that's not why I'm investing in it. And everywhere else, it looks like a really solid company.
Yeah, and I think when you get to dividends of like 5% or above, it's good to look at the dividend history.
Yeah.
And let me see, you have 19 years of consecutive paying dividends, right?
Yeah, it's approaching the dividend aristocrat.
Yeah, and it's been growing its dividend for 14 years.
Yeah. So pretty consistent, that's another thing that you look at too, to make sure that the consistency is there, that it's not just having a really high dividend for the moment and then, dropping it off later on.
Yeah, and when you look at the 10-year of the dividend history, that's been growing.
Right.
That is great. So even if the stock price itself isn't growing that time, like your dividends, you're getting more dividends per stock.
Yeah, so the stock is becoming more profitable to you every year, essentially, even though the price is fluctuating, because usually a lot of people or like general investors just kind of look at the stock price and see it going up and down, like, oh yeah, dividend's nice. Yeah. But yeah, when you really start to look into the dividend history and see that the dividend is growing every year, that's something that would make me want to buy it more as a dividend stock, right? Like you said, it's not really a growth stock. If you're younger, might not be the best play, but if you're approaching retirement, or if this is something that you're going to put in into a Roth or something like that, then it'd probably be a good play.
Yeah, I think this is a great one for those approaching retirement or like early retirement. This seems rock solid.
Yeah.
Okay, I think that's it for this episode.
Yeah, I'll wrap it up.
All right, till next time, guys.
See you next time.